Hello guys, and glad to have you on board again today. Despite talking about technicals today, we are going to use our available time to talk about something that I think is more valuable into the current context. Talking about psychology. Last week we've been making a video about how technical structures, wave 1 extended or wave 5 extended, can impact psychological perceptions of both the risks and the potential rewards. But today we're going to do it on another angle. We're going to talk about seasonality in a technical, but mostly as well in a psychological perspective. To understand that, most of the time, if you've already heard about that, seasonality, if you heard that word, you most likely have heard the fact that generally September and October are some more bearish months, or at least they have more bearish potential. That is, of course, out of historical data that has been recorded and analyzed over multiple years of history and stuff like that. So there's definitely something going on in the data. But what matters to me is the fact that, yes, data shows something, but the significance and the relevance of these data studies are not something we can truly use, which means there is a lot of variance in the data, suggesting that we can't simply apply that on a year-to-year basis. We would have to play that over decades to actually truly benefit from this. As variance is high in terms of statistical relevance, that means you have to play this game on a long set of plays. So you have to play 10 to 15 times to have a little bit of a reward. And don't get me wrong, the divergences to the linear reductions are not that great. So limited rewards to use the statistical advantage of seasonality. For, like we said, quite a lot of statistical variance, so you're going to have to play that game multiple years in a row to try actually bringing some increase in rewards. To try profiting these structures. So let's forget about how much we could make with this, but to understand what's really going on behind the scenes, because of course prices moves due to whoever trades the market, and so far so good, it's still humans who are moving this market. Of course there are more and more robots now, 80% of volume is traded by robots, but still, don't get me wrong, that still leaves us 20% humans. And if you think the robots are trading all by themselves, we're not yet there, okay? Forget about the 1984. We're definitely not at that point, okay? So far so good. 80% robot trading activity, but it is backed by human decisions anyhow and anyway. So there's human implication everywhere in the market. And the seasonality actually is due to this. It's due to psychology. So if you put it into a context, you would understand that this is not necessarily something people control. And to be honest, there are quite a several number of studies suggesting, it's not suggesting actually, it's really proving, medically speaking, that there is seasonality in our bodies as well. So this is not just the markets, it is something that happens inside human bodies. It generally occurs during September and October months, which is when the body has to readjust because seasons are changing. That's also where the seasonality word comes from. So I wouldn't go into too many details to try avoiding being boring in here, but this is one video we're going to get to dive much deeper into the expert series of video on the trading lesson. So this is something that is yet to be recorded. So to make things simple in here without going into too much details, it is basically due to some psychological movements. Your body is going to readjust to new standards as the daylight is going down significantly, going for out of summer and heading into winter. There is also a lot of other changes in the environment that is pushing your body to react, to adapt. Temperatures are falling, and of course we're talking about people living in the northern hemisphere and generally talking about people living in western crowded countries. So city, dense, crowded and stuff like that, and north hemisphere, where we're going to get these daylight savings times or shit like that, that will even more impact these things. So it mostly occurs September and October. We can see, and we have monitored significant hormonal changes into the body, which generally means and leads to thyroidal disruption systems, which means the T4 hormone is generally needed to be readjusted to some more production from the thyroid. For a simple reason, we need more of these T4 and we got less vitamin D, which is a precursor for these T4 to be created. So there's definitely an hormonal system that is being moved at some points, and these movements shifts and definitely impacts our feelings. So this is no shit Sherlock, okay? I just explained you why, but you probably already felt it multiple times in a row because, I mean, God knows how old you are, but you probably have seen that seasonality at play down to your own life experience. September and October are generally weird months in which we are more reacting to stuff, we're more emotive and things like that. That doesn't mean shit happens. It just means that on a personal level, you are more sensitive during this period because your body has to readjust and therefore your hormonal system is readjusting, and therefore it gives you more sensibility to external factors and emotions, which means it happens for you, but it happens for everyone. So when you turn that down to crowded Western countries in which stress is surrounding us at each and every time, so we already have significant levels of stress naturally, and now we're adding on top of this the seasonality of your own body's readjustment. And that gives us an explosive cocktail in which basically people will overreact to most sensitive triggers just because the seasonality tells it, and the environment gets more tricky to navigate because you're not the only one. Everyone's feeling that. So when you're getting nervous and anxious about something, you're going to get more vulnerable and you're going to be triggering extreme emotion easily. And then those extreme emotions might trigger someone else's limit, and therefore this person as well will trigger more emotional responses. And as you can see, this is a loophole into destructiveness, because people get more stupid, and as the environment turns out more stupid, themselves triggers some stupid reactions, putting the whole thing dumber and dumber. Of course, these things are temporary, so that's the reason why we want to talk about these. Hormonal shifts are temporary shiftings from one stage to another, from summer to winter stage, and when this shift is done, everyone goes back to normal. So the seasonality, first of all, is temporary. It lasts from September to October, and generally at the end of October, everything's fine. It can implicate and exacerbate some existing conditions in markets. But you have to understand one thing, that depends on the market's conditions. So psychology in here cannot be traded without a technical analysis. That's really important for you to understand. So now let's get to the next stage. Now that we understand the problem, how can we actually profit from this? So to be honest, I'm not going to detail how you can profit from this because, as we said, statistically speaking, just using the seasonality as a bullish or bearish argument is silly as hell. But it, if put in context, can give you a little bit of a sense. The seasonality on a trending basis means that generally people will have an exacerbated bearish sentiment on the asset. They think the market is going to break some supports because this is yet another sign that, of course, you feel like you're getting more emotive and you think everyone will as well, which is true, but that doesn't mean this will happen. Like we said, for these emotions to translate into prices, we need people to alter their technical scenarios, which is very much more likely to occur in ranging contexts. That's the reason why right now everyone's talking about Bitcoin. And what I like about Bitcoin is that it is in a fucking range. We very likely will break out of this range at some point, but that doesn't mean it will happen now. And in that perspective, this is where I am getting pretty interested about talking about this today, because I think it's definitely in the mood right now. Everyone is getting gorgeously either excited or desperate about altcoins not following Bitcoin or whatever. This is, I think, just normal, exacerbated sentiments. But sentiments comes from contexts. So when we're talking about an altcoin that should pump and is not pumping, well, just give it a fucking patience and it should be fine. Okay, the seasonality will pass and trends always take over on emotions. It's just a matter of time. Trends, in trending context, time is profitable for the trend. So just be patient, the seasonality will roll over and it can introduce a little bit of chaos, but normally shouldn't be a big deal. For ranging context, this will introduce noise potential, and this is really why I insist a lot on these things. Potentiality is what matters into these seasonality opportunities. Whoever takes that as an accounted outcome is going to make significant mistakes. And this is the number one mistake I see right now. People are getting over emotional with the markets and therefore they think volatility is going to emerge. I've been real clear, looking at technicals only. Aside from the psychological management, some assets are inside ranges, specifically Bitcoin and so on. They are below resistances, but these are not neutral ranges. These are ranges inside trends. So we're going to break them to the upside. We just don't know when. That's the reason why I think psychology therefore can impact into these contexts specifically. Reason why I've been talking to you about this on last week's update into TradingView, telling you that only things that can be done in here are breakout trades with a one-to-one exposed risk-reward ratios, and the next target for Bitcoin is very likely going to be somewhere near 54. Near 74. Okay, this is where we're supposed to trade above the higher time frames contexts. But until then, that means also we should be risking approximately the same amount of money. So the stop losses on Bitcoin should be set at 40K, and anything can happen in between. But normally, if you truly use your strategy to place your stop losses accordingly, normally you should be just fine. Still leading me to believe that whatever is going to happen within the next few days, God knows, it can be stupidly volatile, but over time, this is where statistical significance is pointing significantly towards this outcome. So whoever's gambling in the short term, well, that's silly, that's stupid. We are currently exposed into a seasonality occurrence that can still last another couple of weeks, and therefore you're taking some risks for what supposed rewards? To the moon, bro? No, it's not working that way. So try to be smarter than that. The current seasonality exposure exposes you to short-term volatility potential, but that doesn't mean it will happen. So you cannot gamble on the volatility, because that's the second major mistake I see now. People forecasting that the market will break some support, so break some resistances, and therefore this or that will happen. Well, generally these people start their sentences by, well, it looks like the market is going to do this, or I feel like this or that, or maybe this or that, or potentially this or that. That is exactly the sign of a psychological mismanagement, more importantly if the underlying structure is a range. If the asset you're studying isn't a big fat fucking range, then whatever you just said is pointless. Trade what you see. Don't listen to anyone else. You rather like to make mistakes on your own rather than listening to someone else, okay? So think of it that way. When you are in a range, fear of uncertainty and impatience biases will be the reaction to emotional stimuli. And as you will get more sensitive to emotional stimuli during that period, well, guess what? Fear of uncertainty and impatience biases will be there, double down. So try not to fall for these. If you're acting now because you think something will happen and that you're going to miss on this, bang, you just fell for impatience biases. If you are gorgeously looking at every possible video on crypto in YouTube on a day-to-day basis, fulfilling yourself with a shit ton of information that simply isn't going to change anything to your technical structures, well, congratulations, you just fell for the uncertainty biases. So in that perspective, try to understand what's at play. I give you the keys to understand what the hell is truly going on, so you can stop these things from occurring. You can't stop feeling things. I do feel these things as well. Each and every fucking year, September and October are tough months to navigate into psychological order. This isn't simple for me either. You have to understand it that way. The difference I have against some beginners into trading is that I've played that game much longer. And in that perspective, I know that these periods are not the easiest ones to navigate. I know that volatility can emerge, but not necessarily does. So I do not anticipate, and I trade what I see, period. And that's what you guys should do. Technicals should be what you should follow, not whatever someone else is saying on YouTube, not whatever fear of uncertainty or impatience biases you're falling for. And if you want to do a simple things right now, take whatever trade you have, take the list of all your open trades, and try to see if you can rationally give an answer to what you've done. What is the strategy you've traded? Why did you enter it at that precise timing? Where is the invalidation level? What are your targets? If you can answer that questions without hesitation on every given trade you have, well, good job. Keep it that way. Keep trading those trades. Maybe some will fail, some others would work, but over time, seasonality will be negligible because you've been using your goddamn strategy. If some of your trades have been falling for impatience or in fear of uncertainty biases, well, there are two options. I suggest sincerely that you should cut these trades. You've made a mistake, you've learned from it, that's a hard lesson, sometimes comes with a tiny loss, but take it, because these trades can rapidly turn out to denial and shitty, way worse than they are now trades. So in that perspective, listen to me, okay? It's really important for you to understand that. A trade that has poorly started doesn't necessarily mean it will poorly end. But this is not a risk you're willing to take, because the trades that take down accounts are generally trades that started that way. So just for the sake of the probability of eventually this trade being the one that could kill you down the road, kill it now before it kills you. Just because just one of these trades can kill you, and this one might be the one, so don't let it the chance to be. Take a tiny loss now, and then wait for the next fucking context, okay? Trade what you know, don't trade what you think, far less what you look like or what you maybe think. That all of this bullshit generally is the sign of psychological mismanagement. So take your open trades, review them. If they are fine and if they followed your strategy, let them be. Account for the chaos. Normally you have a stop loss that is supposed to absorb the short-term volatility that can occur but not necessarily will. That being said, see you guys later.